Now, NVIDIA isn't the only AI name that's been under pressure. Some of the energy names related to that space have also been selling off, I should say. And joining us now to discuss is Mike Coe. He's the chief strategist at OpenInterest.pro. And Mike, you're watching Vistra. That was our mystery chart. It's up more than 180% in the past 12 months, even with this 20% drop over the past week. How do you play it?
Yeah, so this is an interesting case. As you pointed out, the AI trade, the data center trade, incorporated a lot of electricity generation based on anticipated increases in power demand to service that space. What we saw, of course, is that Vistra, along with the rest of that trade, has sold off quite a lot in recent days. And there is another wrinkle that has been added, and that is the must offer that is going to be related to the auctions that they're going to be holding for PJM later this year. And that basically is an effort by PJM and FERC, which is the Federal Energy Regulatory Commission, has agreed to go along with this to make sure that there is sufficient supply available. And of course, if you increase supply, all else equal, the idea is that that would lower prices, which would put some question on the margins that a lot of people were anticipating for Vistra in the next year, which was anticipated to earn about $6.74 adjusted EPS or so. At that price, if it was able to achieve it, it would be cheap. But of course, if you're going to have pricing a little bit lower than anticipated, then those numbers are coming into question. So right now, the options market is implying a move of about 7.5% after they report. That's in line with the size of the moves that we've seen over the last 4 reported quarters. One of the really big trades that caught my eye, though, was the June 130.90 1x2 put spread. Somebody bought over 4,000 of those 130 puts and then sold the 90s against it to help finance the cost. And that June expiration date's probably not a coincidence, given that that's when that meeting is going to be taking place ahead of those auctions. So that's a way that people who are a little bit concerned that there could be further weakness can make a bearish bet and mitigate some of the expense.
Nothing makes a sexy AI play quite so, doldrummy as talking about FERC meetings and all of these legitimate risks on the horizon. Surat, anything you'd add for investors?
Just a question. I mean, you saw yesterday Microsoft come out and kind of hedge their data center. Do you think that, in addition to others, are now coming out, that you're seeing more of a sell-off here, that some of the momentum is coming out of this?
Well, I mean, the 3-mile pricing that we saw out of that Microsoft arrangement obviously is generally bullish for the space, I would say. And I still anticipate that there is going to be this huge ramp in demand. This is really more of a short-term question about pricing than it is about the fundamentals in terms of the demand for, AI data centers and the power needs that they're going to have. So, I tend to be still a little bit positive, but I rather like trades like this for those who are long. The worst thing that would happen if you put a trade like this on is you're going to lose about 6% of the current stock price. Given the kinds of moves that Kelly was just highlighting, I don't think that's a huge risk to have for a hedge that lasts you out till June.
All right, let's shift gears, Mike. Talk about a stock that never goes down, which is TJX. I think the analysts have been correctly bullish on this one for about 15 years and running. Any reason to expect a change in tone tomorrow when they report? Anything about the consumer? I mean, a lot of people argue weakness might even benefit them there.
Yeah, I mean, they service, a somewhat price-conscious customer. I think they're doing a lot of good things on their marketing side in terms of social media and so on. They have a good sort of, their product offering, I think, is quite attractive, and they really have been operating very well. I think they're looking at something like 7% year-on-year anticipated EPS growth here. But I do believe that the consumer is under significant pressure. Now, we've had a couple bits of data coming out on that front. One is that, of course, we've seen record revolving credit balances. We've seen some increased delinquencies. And I know on the back of that, some strategists have pointed out, we've also seen, very high, basically deposits. And that if you take a look at the credit card balances relative to deposits, it's not that troubling. But you actually have to dig a little bit deeper to understand that about 90% of savers have basically used up all of the savings that they had accumulated during the pandemic, and we had all those transfer payments combined with reduced spending. So I think there is going to continue to be a little bit of pressure here. I don't expect a whole lot of top-line growth. A great operator, but at 30 times forwards, I don't know that it's all that cheap. The options market here implying about a 4.25% move. Again, that's in line with the average that we've seen over the last several reported quarters. One of the big trades we saw there actually was a sale of the March 14th 125 strike calls And I think that's a decent way for somebody who's looking to milk a little extra premium out of it if you don't think that it's going to break out to those November, December highs that we saw, which was right up around $128 a share.
All right, Mike, thanks. Appreciate it today. Mike Coe joining us from
Thank you.
OpenInterest.pro.